Hello, my friends. It's rainy weather today over here, and but I feel awesome, and I'm glad to be here finally. And I feel like I got some raindrops on me because it's so rainy now. Well, I'm kind of drying up already, but while I'm doing that, I'm going to read you a little bit. And I'm glad that I'm able to read to you, and I hope you will appreciate that by writing to me and saying something nice like hello right here in the live chat, and subscribe to my channel. Hello, how are you? Please subscribe to my channel. Wait. And I will read you more, and you will also get from YouTube some notifications about me posting some new videos, so you can come back and listen to my reading and tell me what you think about that. I'm reading this book today, Business for Yourself by Bruce Williams, and we are on chapter 5, Startup Money. And today it is a paragraph called Borrowing Money. And I hope this will help you to get the money to start your business and go forward. You're welcome to write me to my email too, not only in the comments or chat, and it is askmarusa@gmail.com. I will be very glad to get your notes and know more about you. Okay, here it is. Borrowing money. Money is the fuel that makes an enterprise run, and beginning business needs startup money. That invariably involves going into debt. Borrowing money to purchase equipment to be used over the long term is perfectly sound practice and is common in both government and business. In your case, you're borrowing money called venture capital. That is money lent for a new and untried enterprise. Yes, like today I was reading some story about trains. Some manufacturer made some good trains, and foreign company is going to buy those trains, but somehow this foreign company doesn't have money. So the government of that manufacturer country where those trains were manufactured is going to give some money to that foreigner that they will be able to buy it from their country and pay back later. It's a kind of great deal. I really was reading it with some interest because I like that subject about trains and traveling and how it works with some businesses, startup businesses, even if they make trains, even if you make spaceships, for example. Okay. Banks. For most people, the first place that comes to mind when borrowing is mentioned is a bank. If you already have a sound, proven business, there is nothing to prevent you from borrowing money against that business to start another one. If business B goes under, business A will ante up or be liquidated to cover the bank's position. The bank, however, is not going to lend you venture capital in any great amount unsecured. If you want to mortgage the family homestead, you can probably get a loan that way. It's not a sure thing. However, in states that have a homestead law, taxes is one. It's impossible to mortgage your home to start a business. Some other countries too, like Russia. Different banks will look at you and say who you are first. Hey, who are you? What are you doing? Okay, because the law forbids the bank to lend for that purpose. Okay, it's a problem of the law. Okay, let's say you decide to mortgage the house to borrow money from a bank to establish a beauty parlor. Suppose you tell the bank officer, I'm going to leave my job to set up this new beauty parlor and I need 25,000 to get started. Is that so? Well, will they believe you? What do you need so they will believe you? Okay. You have probably guaranteed a rejection because they don't believe you. They'll say, maybe you want to go get a yacht. Go travel around the world. And that's it. Okay. You should not lie to the banker. If you want the money for a beauty parlor, but tell him you want it for an addition to your home, that's a lie. Not volunteering everything, however, is not the same as lying. It's an omission. So, don't volunteer everything means don't tell everything. If he did not ask you whether you intended to stay at your job, it hardly seems necessary for you to blurt out information that squelches your chance for a loan. As for borrowing from a bank, you can probably skip it anyway. Banks are not ordinarily in the business of lending venture capital, and for good reason. Banks are not lending you their own money, with which they would be free to gamble, but the hard-earned savings of their depositors over which they are merely custodians. Federal agencies guarantee and insure these deposits. The FDIC restricts the banks considerably. The banks have a little flexibility, but they are allowed only so many bad debts, and if they go over the limit, they've got a serious problem. They are not in the business of speculating with depositors' money. The function of a bank is to provide the capital for proven enterprises for expansion, not to provide venture capital for new entrepreneurs. But don't pass up an opportunity for a bank loan. Some banks periodically solicit people for a homeowner's line of credit. Yes, some will, some will be so happy to get you. Some bank even got me one time. You can borrow against the equity in your home on a secondary mortgage basis at a fairly competitive interest rate. Sometimes there is a one-time application fee, but the banks often waive the fee. It's smart to apply for that loan when you don't need it. It does not matter whether you borrow or not. The point is that the money is there and you don't have to go in for it wearing knee pads. Wearing knee pads means begging, I guess. Okay, the next part is where else to look. First was the bank. So what did it say? Not all banks will give it to you. Don't lie to the banks, but don't tell everything to you. But some will be happy to give you money. You don't have to wear knee pads for it. It's a good expression. I haven't heard before. Where else to look? Banks probably will not lend you money, and finance companies don't land in the amounts you're looking for. So, where should you get the loan? Except for loan sharks, anywhere you can. Family. First is family. 25 years ago, I would never have said that. I would have said, don't borrow money from your family. That's what I would say 10 years ago. Don't ever deal with your family with bad money. That's all changed now. I never borrowed any money from my parents, but I would never hesitate to lend money to my children. So the other way around, huh? That does not mean that I am more stalwart and self-reliant than they are. It just means that times have changed. When I was trying to borrow money was being lent at 5% interest. Yeah, like how the light changed, do you see? And I go closer, it's later. Okay. 5%. So 5% interest. I took out a third mortgage at one time at a rate then considered usurious. Actually, it was illegal, of 7.5%. That was in 1963. Now, an interest rate of 7.5% is read about in a history book. So, if your parents are going to lend money to the bank at 8% and you are going to borrow it back from the bank at 14%, why not just borrow it directly from your parents and eliminate the middleman? Isn't that great? You can give them 9% interest and everybody benefits. Kind of in the middle, huh? 9%. Your agreement with your parents, however, or with any other family members or friends, shouldn't just be based on a kiss or a handshake. A note should be drawn up specifying the terms of the loan. The loan should be recorded in a business-like fashion. Life is too uncertain to handle it otherwise. So, not just kiss or handshake. Suppose, for instance, a daughter comes to her parents for a 10,000 loan for real estate, and the parents just give it to her without any record of any sort. The loan is not yet repaid at the time the daughter and her husband decide to round out their marriage with a divorce. The son-in-law has an interest in that real estate. Now, if the loan had been somehow recorded as a mortgage or even as an IOU, the parent would have clear rights to recover off their money. But if there is no record, the daughter may say she intended to give the 10,000 back to her parents, and her husband can say, that wasn't a loan, but a gift, and half of it belongs to me. Okay. Or what if the daughter dies? Now the son-in-law has the money and may say that he doesn't know where his wife got the money. So, family. So that means doesn't matter what, recorded. You know, one time a friend of my mother said she wants some money. She asked me for some money, and my mother wasn't there, and I asked her, will you write me paper that I gave you money? She never came back after that. Never ever, actually. To me. Okay, let's read life insurance. So, you don't have parents to borrow from. Do you have a life insurance policy? You may have built up considerable equity that you have forgotten about, and since it's your own money, the interest rate is highly favorable. If you are leaving your job, you may be cashing in a pension plan, or you may be able to borrow against it. Check the tax implications before you act. Well, basically it says check everything, huh? I think she will say it at the end, probably. Okay, let's read a little more. Okay. Back. Thank you very much for watching me and listening. We are reading In Business for Yourself by Bruce Williams. And we are on the chapter 5, Startup Money, and the paragraph is about borrowing money. Right here, borrowing money. About banks. Where else to look? Family, life insurance, and we will also read the seller today. Okay. I'm almost dry already. Thank you very much. You're welcome to write me some questions or statements in the live chat right here. You're welcome. I will be very glad to get to know you better. And if you write me an email, I'll ask you, who are you? Tell me more about yourself. Usually those traveling communities do that. If they care about their people who writes to them, who listens to their pods and their messages, they'll write you back. Personal email. It is so touching. I got one today and it kind of made my day. I really loved it. I love to listen to their pod and the traveling community. I'll tell you more about it. It is nice. Throughout my videos, I'll tell you more about it. Okay, let's read the seller. Ready? Another source you may tap. By the way, you're welcome to stop my video anytime, to pause it. Of course, when it's not online, not live streaming. And write down the points and then learn more about it. You can put this points in the internet, read more about them, how to do it, different ways. I think there will be some information. I never tried to check exactly for this. But every point needs more research. Okay, let's read the seller. Another source you might tap, and this has become standard practice, is the seller if you're buying an existing business. Most sellers today expect to carry paper. Now, what does that expression mean? It means that when the prospective buyer is unable or unwilling to put all the money up in cash, the seller agrees to take at least a portion of the payment over a period of time. A quarter of a century ago, few sellers were carrying paper. The seller would expect you to come to him with the financing all prearranged, and if you walked in and suggested that he take part in the financing, the door would have been slammed in your face. Time and high interest rates have changed all that. If the seller will not carry your paper, if he wants payments in full, you ought to get a bargain. That happened to my son Matthew and me when we were looking for a service station and auto rental property. A fellow called me up and said he heard we were looking. "Why didn't you call me?" he asked. I said, because I heard you're looking for cash and I want somebody to carry me for 10 years. He said he could not do that. He and his brother were dividing an estate. It was his task to settle the estate, and he and his brother were not overcome with fraternal affection for one another. Fraternal affection. He didn't want to administer the payments for 10 years. He wanted to get out of it quickly. That was all right with me, but under those circumstances, I did not expect to pay anything like I would on a deal in which he would help carry me. So we got the land at a fire sale price for about half of what similar properties were going for. Half, wow, by mortgaging another piece of property to come up with the cash. So we got the land at a fire sale price. Oh, nice words I can say. Fire sale price, come to us. With the seller carrying your paper, you will be paying more, but that's because you're using someone else's money. That's all right if it works, as long as the enterprise will throw off enough to retire the debt plus provide a reasonable profit for your labor. What difference does that make? Pay 50% for money if necessary. If you can then get 55% for it somewhere else. But don't pay 5% for it if you can only get 4% for it. The spread is what matters. The difference between the percentages. Don't get hung up on terms either. Terms, however good they sound, are not good if you can't make the payments. Even if the seller offers to carry you at no interest, the business still has to generate enough money to pay him. Suppose the seller offers you a business at no interest, just a payment of $2,000 per month installments, but the business only throws off $1,200. Where does the other $800 come from? And that's how he ends, huh? He ends this part about the seller. So, again, we were talking in the very beginning, like, talk, tell what you want to tell, or ask what you want to ask always. Don't worry if someone will understand you not the way you expect. It's okay, you can think about it. Or the other way, if you still cannot talk, tell, or ask, get the agent or hire someone who will talk for you. Okay? Sometimes it is a decision too. So, life insurance, the seller, the family, the bank, that's about borrowing money. Next time we will read advertising for money. Advertising for money. Let's see. Last resort after advertising for money. Last resort. Other ways of obtaining money, turning liabilities into assets. Which way to go? Okay. Advertising for money is gonna be very interesting, I know, because you're gonna advertise, I know, they're gonna advertise for that subject that they want to have money. Okay, and you know it's a very good practice for your brain if you try to predict something first, then you learn about that, and then you even don't think about that, but your brain will put it all together. and analyze it in its own way and give you a decision somewhere from the back over there. It will come to you and you'll understand that. So remember, your mind is a powerful thing. Okay, thank you very much for watching me. Please subscribe to my channel and I'll read more to you and we'll be very glad to get to know about you more. Bye bye.